there's a pattern that has collapsed every major bank in history. And right now, modern banks are showing the exact same warning signs. In 1397, one family invented modern banking, the Medici. They didn't just run a bank, they built the first international financial network. They invented double-entry bookkeeping. They created letters of credit, the ancestor of every check, wire transfer, and digital payment. They financed popes and kings. They controlled currency exchange across Europe. And at their peak, they were the most powerful financial institution in the world. More powerful than any government. More powerful than the church. More powerful than armies. Because they controlled the one thing no one else understood: money. And then in 1494, the entire empire collapsed. Not over years, over months. Triggered Europe's first financial crisis. Bankrupted nations, toppled governments. Here's what should concern you. In 2008, Lehman Brothers collapsed in 48 hours. In 2023, Silicon Valley Bank collapsed in 10 hours. Same pattern the Medici showed us 530 years ago. What they don't teach you in finance textbooks is that every tactic modern banks use today, branch networks, political financing, currency monopolies, risky sovereign lending, all of it was invented by the Medici, and all of it failed spectacularly. This is the story of how one family created modern banking, and how their collapse revealed the fatal flaw that still exists in every financial system. The same flaw that almost destroyed the global economy in 2008. The same flaw showing cracks again right now. Every empire begins with an innovation no one else understands. For the Medici, it started in 1397. Giovanni de' Bici de' Medici opened a small bank in Florence. Nothing special. Just another money changer in a city full of them. But Giovanni saw something others didn't. The church had a problem. The Pope collected taxes from every corner of Europe. Tithes from England, France, Spain, the Holy Roman Empire. Millions of gold coins flowing toward Rome. But moving physical gold across Europe was dangerous. Bandits, pirates, corrupt officials. Entire shipments would disappear. The church needed a way to move money without moving gold. Giovanni created the solution: letters of credit. A merchant in London could deposit gold with the Medici branch there. Receive a letter, basically a receipt. Travel to Rome, present the letter to the Medici branch in Rome, and withdraw the equivalent value. No gold moved, just paper. And the Medici charged a fee for the service. This was revolutionary, because suddenly, merchants no longer needed armed guards. Kings didn't need to risk gold shipments. The church could collect taxes from across Europe without losing half to theft. And the Medici controlled the entire network. Within 20 years, they had branches in 16 cities: London, Bruges, Geneva, Lyon, Venice, Rome, Naples, Pisa, Avignon, every central trade hub in Europe. They weren't just a bank, they were the infrastructure of European commerce. And here's the key: every transaction, every letter of credit, every currency exchange, every loan was recorded in their ledgers using double-entry bookkeeping, a system they refined to track money across continents. This is the foundation of modern accounting, still used today by every bank, every corporation, every government. The Medici didn't just move money, they invented the tools to control it. And control meant power. When a bank becomes powerful enough, it stops serving governments. It starts controlling them. The Medici understood this. In 1410, Giovanni's bank became the papacy's official bank. Not just a partner, the official financial agent of the Catholic Church. Every tithe collected across Europe flowed through Medici branches. Medici loans financed every papal expense, salaries, construction, and wars. The church became dependent, and dependence creates leverage. By 1434, Giovanni's son, Cosimo de' Medici, used that leverage to take control of Florence itself, not through war, through debt. Cosimo loaned money to every major political family in Florence. When they couldn't repay, he forgave the debt in exchange for political favors, votes, appointments, loyalty. Within a decade, Cosimo controlled Florence's government without ever holding official office. He became known as Cosimo the Elder, the uncrowned ruler of the richest city in Europe. And this is the template. Modern political financing works the exact same way. Banks loan money to governments. Governments become dependent. Banks dictate policy, not through force, through debt. The Medici took it further. They financed popes. In 1458, Cosimo helped elect Pope Pius II, a man personally indebted to the Medici. The Medici maintained close ties with the papacy for decades, though relations sometimes soured. It wasn't until 1513 that a Medici actually became Pope, Giovanni de' Medici, who took the name Leo X, the first of two Medici popes, which meant financial influence over the most powerful institution in Europe, the Catholic Church. This wasn't just banking. This was political engineering, and the profits were staggering. At their peak, the Medici Bank's annual revenue exceeded 100,000 florins. That's roughly tens of millions in today's money. From a single family, running branches across Europe, with no computers, no telegraphs, just letters, ledgers, and leverage. But here's the problem with building an empire on debt. Eventually someone can't pay, and when the borrower is a king, you can't just foreclose. The Medici made the same mistake every too big to fail bank makes. They believed their power made them untouchable, so they started lending to people who couldn't pay, kings. In the 1460s and 1470s, the Medici loaned massive sums to Edward IV of England and Charles the Bold of Burgundy. Why? Because royal clients meant prestige, and prestige meant more business. But kings don't operate like merchants. Merchants repay loans because they need future credit. Kings repay loans when they feel like it. Edward IV borrowed heavily to finance wars. He won. But winning doesn't mean paying your bankers. And when a king decides not to repay, there's nothing a banker can do. Charles the Bold? He died in battle in 1477. His entire duchy collapsed. The Medici loans never repaid. By the 1480s, the Medici Bank was holding millions of florins in bad debt, loans that would never be recovered. And here's where it gets worse. Lorenzo de' Medici, Cosimo's grandson, known as Lorenzo the Magnificent, was running the bank by this point. Lorenzo was brilliant at art, poetry, and politics. He was terrible at banking. He kept making the same mistakes. More loans to royalty, more risky investments, more political spending to maintain power in Florence. The Medici branches started operating at a loss. London losing money, Bruges losing money, Lyon losing money. But Lorenzo kept the empire running by borrowing from one branch to cover losses in another. Sound familiar? This is how Lehman Brothers operated before 2008. This is how Enron operated before 2001. Borrowing from the future to pay for the present. It works until it doesn't. And for the Medici, the breaking point came in 1494. Not from poor management, from an invasion. Because when your empire is built on political leverage, all it takes is one political shift to destroy everything. In 1494, France invaded Italy. King Charles VIII marched 25,000 soldiers through Florence. Lorenzo de' Medici had died 2 years earlier. His son Piero was in charge, and Piero made a catastrophic decision. He surrendered, without a fight. He handed over key Florentine fortresses to the French. He agreed to pay a massive tribute, and the people of Florence, who had lived under Medici control for 60 years, snapped. They didn't blame the French, they blamed the Medici. Within weeks, Piero was expelled from Florence. The Medici family fled, and the bank? Chaos. Branches across Europe panicked. Depositors demanded withdrawals. Creditors called in loans, but the Medici couldn't pay. Most of their assets were locked in bad royal debt. Loans that couldn't be collected, properties that couldn't be sold, political IOUs that were now worthless. This is a bank run, the first major one in European history, and it revealed the fundamental flaw in fractional reserve banking. A bank never holds enough cash to pay all depositors at once. It works on trust, trust that not everyone will withdraw at the same time. But when that trust breaks, when people panic, the system collapses instantly. The Medici Bank didn't fail because of bad loans. It failed because of lost confidence. And once confidence is gone, no amount of wealth can save you. By 1494, the Medici Bank was finished. Branches closed across Europe. Depositors lost fortunes. Merchants who relied on Medici letters of credit were stranded. Trade routes fractured. Florence's economy collapsed. And the Medici family, once the most powerful in Europe, spent the next decade in exile. The empire that took 100 years to build vanished in months, not because of military defeat, because of financial panic. And here's the lesson no one talks about. The Medici weren't destroyed by enemies. They were destroyed by the system they created, a system where power depends on trust. And trust, once broken, is almost impossible to rebuild. The Medici Bank collapsed in 1494, but their methods didn't, because every innovation they created became standard practice. Branch banking. Every modern bank operates this way. Letters of credit evolved into checks, wire transfers, and digital payments. Double-entry bookkeeping is still the foundation of accounting worldwide. Political financing, modern lobbying, and campaign contributions are the Medici playbook. Currency monopolies. Central banks control exchange rates the way the Medici controlled Florence. The Medici proved that you don't need an army to control a nation. You just need to control its money. And that lesson was learned by every power structure that followed. The Bank of England, founded in 1694, used the Medici model. The Rothschilds in the 1800s built their empire on Medici tactics. J.P. Morgan, Goldman Sachs, the Federal Reserve, all descendants of the system the Medici invented. But here's the warning. The Medici also proved something else. That too big to fail is a myth. That political power can't protect you from financial panic. That when trust breaks, size doesn't matter. You collapse anyway. In 2008, Lehman Brothers was the fourth largest investment bank in the United States. Assets over $600 billion, politically connected, systemically important, and it failed in 48 hours because depositors lost confidence, because the system was built on leverage and bad debt, because trust evaporated faster than bailouts could arrive. The Medici in 1494, Lehman in 2008. Same pattern, same result. The only difference? In 1494, there was no central bank to intervene. In 2008, there was. And that intervention didn't fix the problem. It just delayed it, because the fundamental flaw remains. Modern banking is built on fractional reserves, on the assumption that not everyone will demand their money at once, on trust. And when events like 2023's Silicon Valley Bank collapse happen, when depositors panic and withdraw billions in hours, the cracks reappear. The system the Medici built is still fragile, still dependent on confidence, still vulnerable to the exact same collapse. And every time it fails, the response is the same. Bailouts, liquidity injections, emergency measures. The tools change, but the cycle doesn't. So what do you do when you see the pattern repeating? You recognize the signals, because financial collapses don't happen overnight. They happen in stages. Stages the Medici showed us 530 years ago. Stage 1, innovation. Watch for new financial products that revolutionize markets. Derivatives in the 1990s, mortgage-backed securities in the 2000s, crypto lending platforms in the 2020s. Innovation isn't bad, but it always precedes overextension. Stage 2, political capture. Watch when banks become too important to regulate, when financial institutions fund political campaigns, when regulators come from the industry they're supposed to oversee. The Medici financed popes. Modern banks finance lawmakers. Same mechanism. Stage 3, overextension. Watch for rising debt levels, for banks holding assets that they can't liquidate, for safe investments that suddenly aren't. The Medici held uncollectible royal debt. Lehman held toxic mortgage bonds. The warning signs are always there. Stage 4, panic. Watch for sudden withdrawals, for trust evaporating faster than central banks can respond, for the word liquidity crisis appearing in headlines. When Stage 4 starts, it moves fast. Stage 5, collapse or bailout. The Medici collapsed. Lehman collapsed. But many modern banks don't, because central banks intervene, which doesn't fix the system. It just resets the cycle. These aren't predictions, they're patterns. Historical patterns that repeat because human behavior doesn't change. The Medici invented modern banking, and they showed us exactly how it fails. The question isn't if it will happen again. The question is whether you'll recognize it when it does. If you've watched this far, you understand the pattern. You see how the Medici blueprint shaped every financial system since 1494, and you see how the same flaws still exist today. Subscribe to Capital Origins, because when the next bank collapse happens, when the next too-big-to-fail institution starts showing cracks, you'll want to understand what stage you're in and what historically comes next. Hit subscribe, because the Medici story isn't ancient history. It's a preview. The cycle didn't end in 1494. It just paused, and the warning signs are already appearing again.